What if nearly 200 million euros of taxpayers' money vanished? Not through a heist, not through hacking, but through invisible trades, fake invoices, and whispers through a centuries-old underground network. That's the story behind the European Public Prosecutor Office latest indictment. A criminal organization stretching from Denmark to Turkey accused of running one of Europe's largest cross-border VAT frauds and laundering the proceeds through hawala networks and crypto fronts. It began quietly, sometime around 2019. 3 Danish citizens and 2 Turkish nationals, all based in Germany, allegedly started building what looked like an ordinary electronics business empire. Company registrations appeared in Germany, France, Hungary, Sweden, all tied by layers of directors, accountants, and shell addresses. On paper, they were trading high-demand consumer tech, smartphones, AirPods, computer parts. In reality, it was what investigators call a carousel, a sophisticated VAT fraud loop that spins goods, invoices, and tax refunds in circles until millions are siphoned off. In the European Union, goods traded between member states are exempt from VAT at the point of export. So if a company in France sells to a company in Germany, no VAT is charged. The buyer pays it when reselling domestically. But if the buyer never pays that VAT and then vanishes, while another company in the chain claims a refund, the tax authority ends up paying money that never existed. The same goods are then resold across borders, often repeatedly, each time generating fake invoices and fresh VAT claims. It's called a carousel because the paperwork spins endlessly, while the goods themselves might never move at all. By 2023, according to the EPPO, the group had committed more than 100 instances of aggravated VAT fraud, draining an estimated $188 million from EU and national budgets. The losses didn't just hurt treasuries, they undercut honest businesses, distorted markets, and exposed how easy it still is to exploit gaps between tax jurisdictions. But this organization wasn't just about fake invoices. It had something far more sophisticated and ancient working in its favor. So how do you move hundreds of millions of euros without triggering a single alarm? Not through banks, not through SWIFT, not through any system with a paper trail. You do it through hawala. Hawala, meaning transfer in Arabic, is one of the world's oldest money networks. It predates modern banking, built entirely on trust. A person in one country gives cash to a broker, a hawaladar, who contacts another broker in another country. That second broker pays the recipient, minus a fee. No money crosses borders. No record exists. Only debts between brokers, settled later through trade, goods, or offsetting transactions. It's fast, it's discreet, and in criminal hands, it's almost perfect. According to prosecutors, 2 of the main suspects were not only the masterminds of the VAT carousel, but also the operators of a hawala network that moved money between Turkey and Germany. When the fake companies claimed their VAT refunds, the money was sent to multiple accounts under front names, cashed out, and transferred to hawaladars who passed equivalent amounts to Turkey, effectively erasing the origin of funds. Investigators say the group even founded a blockchain company, using crypto as an additional layer of disguise. It wasn't just laundering, it was hybrid laundering, blending old-world informality with modern decentralization. At one point, fake consulting firms in Istanbul issued invoices for services rendered to European shell companies. In reality, those invoices were just cover slips for laundering. Funds would bounce through bank accounts in Poland, Lithuania, and beyond, before disappearing into hawala settlements. Each layer was carefully constructed to exploit 2 systems that rarely speak to each other: Europe's financial regulators and informal money networks in Asia and the Middle East. That's why it took the EPPO years to trace. The investigation that brought this down was aptly named Operation Goliath. Led by the European Public Prosecutor's Office, it pulled together authorities from multiple countries, Denmark, Germany, France, Sweden, and Turkey. Searches, arrests, and asset seizures were coordinated across borders in one of the EPPO most complex cases to date. For context, the EPPO is a relatively new body, launched in 2021, with the power to investigate and prosecute crimes affecting the EU's financial interests. It's independent of national governments but works alongside them, a crucial factor in tackling crimes that don't respect borders. Investigators use data from customs declarations, cross-border payments, and digital ledgers to reconstruct how the carousel turned. They found identical invoice templates across companies in different countries. They found emails coordinating shipments that never existed. And they uncovered directors who didn't even know they were listed on corporate documents. One of the most telling discoveries came from surveillance. The same IP address logging into supposedly independent company accounts in multiple countries. That single clue cracked open the facade. By the time prosecutors moved in, over 100 company bank accounts had been flagged, and multiple properties and luxury vehicles were seized. But recovering the stolen money? That's the hard part. Much of it was already off-grid, converted into crypto, commodities, or moved through informal trade to Turkey and beyond. Still, the indictment was a statement. Even in a system designed to hide in plain sight, digital footprints remain. Here's what makes this case bigger than one group of criminals. VAT fraud is Europe's silent deficit. Each year, the EU loses over $60 billion to VAT evasion, and a large portion comes from these so-called carousel or missing trader schemes. It's one of the most common financial crimes on the continent, yet often overshadowed by money laundering or terrorism financing. Why? Because VAT fraud looks boring. It happens on spreadsheets, not in shootouts. But its impact is enormous, draining public funds meant for healthcare, infrastructure, and education. EPPO Chief Prosecutor Laura Kövesi has repeatedly warned that VAT fraud networks are evolving, becoming more digitized, more international, and more reliant on informal finance systems like hawala. And that combination is deadly. Hawala adds opacity. Crypto adds anonymity. Cross-border trade adds complexity. The trio together forms a near-perfect financial crime engine. For criminals, it's business. For governments, it's chaos. That's why this case is seen as a milestone. It shows that Europe is no longer treating tax fraud as white-collar paperwork crime. If you found this story fascinating, hit the like button and subscribe for more deep dives into the world of financial crime and global corruption.